The only way to build wealth in this space, in my opinion, is to have a 10-year view. Bitcoin and ETH went down 90% in 2018. Okay, so I'm not saying we're going to go down 90%. I'm saying we can go down 70%.
Dan Tapiero explores Bitcoin's underperformance, market pauses, cycle relevance, and macro maturity. Join in to uncover powerful insights ahead right now.
Look, I think that's the problem, is that I always say this, that this is the easiest market to make money in. It is nearly impossible to hold on to it. And that's largely because many of the players also have more of a short-term mentality. The only way to build wealth in this space, in my opinion, is to have a 10-year view. In the digital asset, crypto, Web3, Bitcoin space, however you want to call it, there are a lot of people who don't have experience managing a portfolio. They've never traded bonds and currencies and stocks and commodities in the old market. This is a market just like any other market. And we've seen this many, many times. So this is definitely still, to me, in the bull phase. And it's a consolidative period. I'll tell you why. If I step back and I look at the fundamentals driving the entire space, they are so much better than 5 years ago, than 10 years ago. It's incredible. 10 years ago, people were being put in jail, right, for transacting in certain cryptocurrencies. Even 2 years ago, I had companies in my 50T portfolio that were being sued by the SEC. Okay, 2 years ago. Those companies, some of them are now public. They're public companies. I think the macro backdrop is still positive, so I don't see a bear phase emanating from that. You know, a big part of the Bitcoin drop in 21, 22 was not just FTX blowing up and 3AC. It was also the Fed took interest rates from 0 to 5.
Bitcoin is holding just above $95,000 this morning, but the move feels shaky rather than triumphant. After rocketing past $126,000 in October, the sudden reversal has left traders uneasy. A modest 2% lift in early London hours suggests bargain hunters are stepping back in, yet the market's confidence clearly hasn't recovered. The drop has been dramatic. Nearly a quarter of Bitcoin's value has evaporated in a few short weeks, with an additional 6% lost over the past 7 days. Much of this weakness stems from forced selling as over-leveraged positions were flushed out. Earlier this month, a burst of global trade tension sparked a wave of liquidations across the crypto market, dragging down both seasoned traders and retail investors who had ventured into crypto-linked stocks. Money that once viewed Bitcoin as a dependable inflation hedge has also rotated toward equities and gold, both hitting new highs. This shift has rattled traders already on edge about whether the familiar halving cycle excitement, followed by exhaustion, is repeating once again. Meanwhile, institutional buyers who had fueled ETF-driven inflows appear to be sitting tight until volatility cools. For now, the market sits between optimism and doubt. Today's rebound helps, but the deeper fractures remain.
Well, markets over the short term never exactly correlate. And I know gold has been strong, as you mentioned, and traditionally that's meant that Bitcoin would also be strong. The liquidity that's hit NASDAQ and gold traditionally hit, in a positive way, Bitcoin, ETH, and the space in general. I think this bull phase, we still are going to 180,000. That was my target from the bottom, at the bottom of 22 and early 23. But I said very clearly, and I've thought this, that we were going to get to 100,000 and then we were going to stop for a while. Okay? I don't know if it was going to be weeks or months. I don't know how long. In markets, there's a very sort of, in a way, silly theory called the big round number theory. And markets tend to stop at big round numbers. Dow at 10,000, NASDAQ 5,000, or whatever 4,000, whatever, the round number is. And I think that what's happened is you have a lot of distribution. So people who have been long Bitcoin, call it from 21 before, right? People who bought Bitcoin at 5,000, 10,000, people who bought Bitcoin at 100, 200, 300 from years ago. I think their essential target has always been 100,000. Always. Okay? If you bought Bitcoin at $500 and you're at 100,000 now, it is very difficult to think, let's say that's over a 7-8 year period, very difficult to think that you're going to make the same type of percentage return over the coming 5 to 7 years. It's hard to make a bet that it's going to 2 million. I think, which would be a 20x. I think Bitcoin is going, I think Bitcoin minimum, should do $1 million over the next 10 years. Okay, but that's a 10x return. That's not what you've made in the past 5 years. And so I think that, we have a natural stopping point here at 100,000. And you're seeing major, very large liquidations. OG whales selling at, $1 billion of Bitcoin. The other day, Galaxy announced they sold $9 billion for one person. And that one person was probably in it, 10, 12 years, who knows? So gold, as an example, in the last 5 years, is not up 20 times, right? Even if I think about the bottom in early 23, when Bitcoin was 20,000, Bitcoin is up 5 times. Gold is not up 5 times in the last 5 years. So when you say Bitcoin's underperformed gold in the last 6 months or the last year, it's just because you're using a starting point that isn't really valid. And so I think Bitcoin is doing absolutely what it should be doing. Now, you go on X or Twitter, right? And every single little trader guy is complaining because, they want it to go higher. And every time it goes up to 120,000, they start buying, and they buy on leverage. And then a big seller comes in and wipes them all out down to 100,000. We've seen that multiple times.
Tom Lee is pushing back against the gloom, calling Bitcoin's latest sell-off a case of market maker distress rather than a true breakdown. Bitcoin's slide to $95,000 has sparked fresh fear as it fell below the key 365-day moving average, a level that often separates bull strength from deeper weakness. Some traders now worry the price could drift as low as $55,000 if momentum keeps fading, but Lee argues the drop isn't driven by long-term fundamentals. It's the aftermath of the violent October 10 flash crash, which forced sharks and market makers to unload assets to cover losses. He believes this type of selling pressure tends to resolve within 6 to 8 weeks, which puts a potential market rebound somewhere after Thanksgiving. That timeline is echoed by growing signs of sentiment cleanup. Social dominance around Bitcoin has surged, and historically, spikes in fear and FUD have marked major bottoms. Still, uncertainty around the next Federal Reserve move looms large. A rate cut could spark a relief rally, but current odds lean slightly toward another pause instead. For now, the mood is tense but hopeful. The market looks battered, yet conditions that often precede a recovery are quietly forming beneath the surface. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news all for free. That's all for today's video. Until next time.